banks are sitting on a plethora of information on behalf of their customers. So absolutely, how banks move into these new forms of AI and how we deal with the ethics around that, the governance and the security and safety is absolutely critical.
Melanie Evans, welcome to The Business. The chair of ASIC is warning banks they can't afford to get the implementation of artificial intelligence wrong. Are banks rushing too quickly into this technology?
I think the reality is that banks in Australia have been using AI for quite some time. We probably haven't done a spectacular job at communicating all of the benefits of AI and how AI helps our customers either get better outcomes or indeed better service from banks and other institutions. I think that the Chair, Joe Longo, spoke very wonderfully about the fact that if we focus on the benefit to the customer and looking after the customer's interest, then AI can actually be used for great customer outcomes rather than the alternative. A good example that we use in our business at ING is we actually collate all of the information that we get via voice in our contact centre, and we use an AI model to analyse what we hear from customers on a daily basis. So we're able to replay to our contact centre very frequently the key issues that customers are calling us about. We can identify any systemic risks or issues that we're seeing our customers calling us about. So these are really good examples of how banks are currently using AI to ensure that they're protecting customers and actually doing the right thing.
But Joe Longo did sound a note of caution. Do you accept his argument that banks hold much of the responsibility for whether Australians' trust in AI generally increases?
Absolutely. I think banks are an integral part of the economy and society. And if you think about all of the information and data that banks hold on behalf of customers, whether that's personal and identification data to transactional data, someone's wealth information, insurance, whatever it might be, banks are sitting on a plethora of information on behalf of their customers. So absolutely, how banks move into these new forms of AI and how we deal with the ethics around that, the governance and the security and safety is absolutely critical to whether or not Australians trust AI more broadly, not just in banking.
So what are the biggest possible pitfalls for the banks, given that regulators have found previous advances in technology have seen some vulnerable customers left behind, sometimes in the lurch? And of course, there's been a lot of negative sentiment about scams and what banks could have done much earlier to address them.
Yeah, I think what we heard today was really a call to action from the chair of ASIC around banks stepping in and really focusing around those most vulnerable in our community and whether or not we're using AI and technology more broadly in terms of picking up those systemic risks or those situations where we can actually identify where vulnerable customers or indeed any Australian really might be better suited to a different product or service. The example the chair gave around looking after customers who were being exposed to considerable overdrawn fees or interest payments or whatever it might be, I think there was really a call to action from the chair to all of the people in the room around using AI to avoid those situations and actually be more proactive to ensure that we're letting customers know if there's a more appropriate product and service for them.
Will that be a challenge for the banks?
This is not a challenging space for us. As I used the example before at ING, we're currently using AI to pick up these constant and familiar patterns in either customer outcomes, in calls that we receive from our customers, and we look for those patterns in the data, and we're using large language models and AI to identify where we actually need to make changes, contact customers and look after customers. I think that the challenge is on all of us to step into this space and to make sure that as computer power, data and what we can do with technology advances, that we make sure that we're continually showing that we're using those new capabilities for the good of all Australians, particularly in the banking system.
How many jobs have already disappeared from the banking sector due to AI?
I can't speak on behalf of the banking sector. I'm fortunate enough to be working in an organisation that's in growth mode. So we use AI right across our business. What we've been focusing on is ensuring that where we create capacity or productivity gains when it comes to introducing AI to specific parts of our business model, we're actually simply just using that capacity to go off and do other things for customers, or we might be moving forward and building new products and services rather than spending longer time periods on certain things.
And so specifically, has ING lost any jobs to AI?
We haven't lost any jobs in ING due to AI. As I said, we're fortunate enough to be in a challenger bank with a growing customer base. So we're actually in growth mode. So it's not something that we've seen job losses because of AI. We've got enough demand there and growth in our system that we're able to redeploy the capacity that we find by introducing AI elsewhere. In addition, we're using AI to improve the services. So AI in our business model is not just about saving costs, it's actually about introducing new services, new ways of doing things, and new benefits to customers. So AI is not just a productivity and efficiency and a job-cutting piece of work. There's plenty of things that you can use AI for to deliver a better customer experience and do more things for your customers.
You say ING is in growth mode, but it is a direct or digital bank. Is the Big Four's embrace of AI and digital banking putting ING under increasing pressure?
I think it's fair to say that banking is absolutely a more competitive industry than ever before. As we went through the last 5 to 10 years, even those organisations that have non-digital channels have definitely strengthened their digital offer. That's great for customers. It puts more pressure on us and strengthens our resolve to continue to ensure that we lead from a digital and a technology perspective.
We'll soon see the Council of Financial Regulators report into what is required to maintain competitiveness in small and medium-sized banks. What do you want to see included among the recommendations?
Well, I think the first thing that we would expect from the report is a resounding commitment to competition in the banking industry. We obviously have a structure in our industry where we have 4 major banks and then we have mid-tier and smaller banks. And the first thing I would like to see is a resounding message that competition is important and it's great for customers. So in doing that, what we need to do is make sure that we see a real step change forward into what the Treasurer introduced a couple of years ago around the concept of proportionate regulation. And we want to be able to ensure that no matter what the size of the bank or what business model a bank brings to the Australian market, that they can compete fairly and squarely for customer business.
Do you expect there'll be much less resistance to the idea of closing bank branches in regional areas when the current moratorium on the Big Four closing down branches ends in 2027?
I think what the current moratorium does is gives the industry time to work with government around finding alternative solutions to having physical bank branches in place across regional Australia. We've already seen an increased commitment to bank at post through any Australia Post outlet. We know that we've got some work to do around cash recycling ATMs and access to cash via channels other than physical branches in regional Australia. So that moratorium gives us that time and space to ensure that we can make sure that we meet the needs of regional Australia and remote Australia more broadly. What we don't want to see is any form of tax on banks that have alternative business models that don't include branches. Back to the point earlier, if we want a competitive industry that allows different business models to come in and compete in order to deliver better service and better value for Australians, we want to make sure that we're all in an industry where we're not cross-subsidising each other's business models, and we need to foster innovation and not tax it.
Melanie Evans, thank you.
Thanks.